Let's talk about transitioning from S corporation to LLC. So what are the tax implications here? So here's a synopsis I want you to pay attention to. So how do you actually change your S corporation to an LLC? The thing is that converting S corporation to an LLC involves planning out the conversion in detail, getting the approval of all members and shareholders of your company, and filing the required paperwork. So I want you to remember those three steps. Okay, it's an important trifecta. So you need to plan out everything in detail. You need to get the approval of all members of the company and shareholders, and then you got to file the required paperwork. But it's important to understand that there are some obstacles. There are some challenges depending upon the state where you are currently located at. So if your S corporation is located in New York versus Louisiana or versus New Mexico, there are some changes. There are some subtleties here. It's really important to understand that you need to navigate. If you are sort of confused about how the whole process works, please help yourself out. You want to hire like an attorney, a tax attorney, an enrolled agent, or a CPA to kind of help you out. Why should you convert an S corporation to an LLC in the first place? Well, you may find yourself in a position where converting your S corporation to an LLC is highly beneficial. The main reasons most S corporations convert to LLC are to avoid capital gains tax, to get different management options, to allocate profit share differently, and to have more flexibility in how they're taxed. Okay, now let's talk about the tax advantages. One of the biggest benefits of forming an LLC is not having to pay capital gains tax on passive income. LLCs are subject to a pass-through taxation, where company profits and losses are divided amongst the members per the percentages outlined in their operating agreement and taxed as personal income. You also have enhanced management options. So S corporations are limited to 100 shareholders, while an LLC can have an unlimited number of members. Additionally, S corporations are required to have a board of directors, host the annual meetings, and take down minutes. An LLC is member managed, so it doesn't have to do any of the above, really. And in addition, getting approval for specific activities within an LLC requires only the approval of the other members, whereas an S corporation requires most decisions to receive full board approval. So you have more flexibility here when we talk about LLC. You also have a flexibility for profit and loss. So S corporations use shares to distribute profit, where each share is worth an equal amount. Profits are then distributed accordingly, and those with more shares in the company receive more of the profits. In an LLC, profits can be allocated based on ownership interest, but they can also be allocated separately. So a member of an LLC with a 15% stake who made a cash contribution higher than other members, for example, could receive a higher profit share without the need to change their ownership stake. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let me give you a bonus here. So there are some tax benefits of converting S corporation to an LLC. The thing here is that when we talk about the fiscal benefits, what are we talking about here? You have no capital gains tax, flexible taxation, deductions for capital expenses. Let me go a little granular here. So when I talk about no capital gains tax, you have to understand, unlike corporations, LLCs are not required to pay capital gains tax after investments and capital assets are sold. As a result, LLCs have more freedom to sell assets without tax penalties. This is kind of cool because you are able to be operational. This gives you more operational autonomy, if you will. You also have flexible taxation. So one of the biggest differences between an LLC and an S corporation is that an LLC can choose to be taxed as a partnership, S corporation, or C corporation, depending on what achieves the greatest tax advantage. S corporations are limited to standard pass-through taxation and don't have access to the same flexibility. So choosing an S corporation tax election status for your LLC can help you reduce your self-employment taxes while eliminating the requirement to have a board of directors and meeting minutes. Okay, so when I talk about an LLC can choose to be taxed as a partnership, S corporation, or C corporation, this means that if you're an LLC and you are, let's say, a single member LLC, by default, the IRS views you as a disregarded entity. But if you're a multi-member LLC, you can choose to be taxed as a partnership, and then you're going to have to file Form 1065 with Schedule K1. That's actually the default tax status. You can choose to be taxed as an S corporation, in which case you file Form 1120S, or you can choose to be taxed as a C corporation, in which case you file Form 1120. You also have a deduction for capital expenses. This is another tax benefits of converting S corporation to an LLC. And S corporations are not allowed to deduct capital expenditures as they're not deemed necessary by the IRS. LLCs, however, are able to deduct these expenses, goods, equipment, etc., over a 1-year period. So it's important to think about that. It's also important to note, however, that there may be some transitional bumps in the road that your business will have to overcome to reach the above benefits. While some states allow you to initiate a business entity conversion that prevents you from having to dissolve your S corporation, other states will require you to form an LLC, initiate a merger, and then dissolve the S corporation. Alternatively, you can liquidate your business assets by temporarily transferring them to your shareholders. So regardless of how you do it, if your S corporation has increased in value since formation, the IRS will charge a capital gains tax against your business and its shareholders. That's just the way the cookie crumbles, so think about it. But once your company is operating as an LLC, your business will enjoy years of flexibility and tax benefits. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about transitioning from S corporation to LLC. What are the tax implications? So let me give you the steps you need to really think about if you want to transition from a S corporation to an LLC. The first thing you want to do here is to start the conversation. So if you are the majority shareholder of a company and wish to convert an S corporation to an LLC, start by speaking with other directors to discuss the pros and cons of the transition. You'll need to make sure the right people are on board to carry the decision through to approval. Will you form a multi-member LLC or a single member? Is it more costly to convert an S corp to an LLC than to continue managing the S corporation? You also want to consider the additional paperwork required for tax filing and the tax consequences of the conversion depending on the state your S corporation is registered in, and how the conversion will impact your legal and financial obligations. So it's not just about like taxes, right? It's all about your liquidity. So it's about your operational status. It's about your operational vision also. So start the conversation first. Second thing is you want to create a plan of conversion. This is so quintessential. What I'm telling you here, you can actually always avail yourself of the services of a lawyer, an EA, an enrolled agent, or a CPA to kind of help you out. So when we talk about creating a plan of conversion, what are we speaking about? In most cases, if your state allows you to convert an S corporation to an LLC, you'll be required to prepare a plan of conversion outlining the details of the entity change. So this is one of those documents where details are important. You got to go as granular as possible. You may also be required to get the approval of the board of directors before you are able to present the conversion to your shareholders. And so this is one of those things where you have to be really specific. If it has been, for example, specified in your articles of incorporation that a specific majority is required for any vote within the corporation, that means what? It means that you will be required to obtain that specific majority in order to carry the vote, okay? And each state that allows a conversion will have different requirements in terms of what must be included in your plan of conversion. So be sure to check with your Secretary of State to confirm these details beforehand. There are two things here. Again, first of all, avail yourself of the services of a pro. So you can basically, get a local tax attorney. I mean, if you spend $200, $300 now, it's just a lot better than to actually have years of nightmare anyway. Or you can just let us know in the comment section below, and one of our team members will certainly get back to you. But when you ask a question, please always let us know your current business structure and the state and city you are actually asking the question from. next thing you want to do here is to gain the approval. And I'm not just talking about any kind of approval. You need to gain the appropriate approval. Very important. If you are required to prepare a conversion plan, it will need to be approved by your board of directors and the majority of your company's shareholders. We're speaking about S corporation here. So which means what? You have fewer than 100 shareholders. And if your state doesn't require a plan of conversion, then you will need a majority shareholder vote to convert an S corporation to an LLC. And if it has been specified in your articles of incorporation that a specific majority is required for any vote within the corporation, you'll be required to obtain that specified majority to carry the vote. It's one of those things where before you start anything, you want to go back to your S corporation's articles of incorporation to have a clear idea about things like quota, like the specified majority vote, and so on and so forth. The next step you have to really do here is to prepare and file the required documents. So to convert an S corporation to an LLC, you'll need to file a conversion form, which has different names depending on your state. Some states refer to it as a certificate, a statement, or articles of conversion. So it can be certificate of conversion, statement of conversion, or articles of conversion. So as forming a new LLC is part of the conversion process, you'll also need to file articles of organization and pay the filing fees corresponding to your state. In some states, those articles of organization are called articles of incorporation. It really depends. So the point I'm trying to make here is that you need to think simultaneously about conversion and formation, because you are forming a new LLC. So once your conversion is complete, the assets and liabilities belonging to your S corporation will be automatically applied to your new LLC. Now, there are some legal and some accounting, I would say some accounting transformations to happen, but those will be better discussed with your attorney, your CPA, or your EA, because we have no idea what's really happening within your business. It's on a case-by-case basis, so to speak. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about transitioning from S corporation to LLC. What are the tax implications? Let me give you the approach you need to follow here. So let's talk about dissolving a corporation to form an LLC. In the case that your S corporation needs to be dissolved in order to convert it to an LLC, there are several steps you need to take to fulfill the tax and legal requirements, and those steps must be followed like verbatim. First of all, take it to a vote. So to actually dissolve an S corporation, you will need shareholder approval. Specifically, this means what? That you will need a majority vote from shareholders in order to consider the dissolution of your company at all. So we're speaking here again about fewer than 100 members, 100 shareholders. To conduct this vote, your board of directors should create a resolution for dissolution and have all shareholders express their vote, all of them. That's number one. Number two, you want to pause business operations. So once the majority vote has been recorded and shareholders agree to the dissolution of the corporation, your business is required to cease any and all operations. And at this stage, you are quite literally closed for business, and you cannot take on any new projects or clients. And the focus should shift from running daily operations to performing all the tasks required for dissolution. Any transactions that do occur should be strictly for the purposes of dissolving your S corporation. And one thing you also want to do here is to notify your creditors, okay? Because the last thing you want is to actually damage your personal credit score or your business credit score, for that matter. Even though the business will be dissolved pretty soon, you will have some kind of trigger effect from business credit score to personal credit score. So you want to notify your creditors. Notification must be sent to any creditors who have open or pending claims against your business. This will allow the appropriate time for both parties to plan how the business will settle these claims and legally end any commitments that are in place when the dissolution vote is carried out. You may be required to post a notice of dissolution in your local newspaper to meet your state's notice requirements. So when we talk about creditors, we're also involving the IRS and state tax authorities, of course, if you owe them money. In terms of creditors, we're speaking about like business loans, business lines of credit, all kinds of liabilities. And then you want to liquidate all your assets. Any assets that your business owns, including property, must be liquidated. Your company can liquidate by actually distributing assets according to ownership share or selling to other companies or individual buyers on the open market. But everything must go. Okay? Everything must go. The IRS will actually require you to report any gain or loss on the assets being liquidated, and appropriate taxes will need to be paid depending on the outcome. So it's one of those things where you have to look at the situation on a case-by-case basis. You also want to settle any open claims. So we're still talking about the transition from S corporation to LLC here, the tax implications. So any proceeds that results from the sale of your company's liquidated assets must be used to pay creditors and outstanding debts first. Okay, so your company can accept or reject creditor claims, but any rejections must be made to the creditors in writing. So don't actually accept to do things via email or let's say on the phone. It has to be in writing. Employees must also be paid using these proceeds if applicable. The dissolution of your S corporation cannot be finalized if outstanding amounts are owed to employees. In addition, if you distribute assets to owners or shareholders, you will be required to report this distribution to the IRS and in some cases to state tax authorities. You also need to file for a certificate of termination. So in order to formally dissolve and close your S corporation business, you will need to file forms with the IRS, your local tax agency, and your state tax agency. And the IRS will require you to file Form 966 within 30 days of dissolving and liquidating, and you will need to provide a copy of your Schedule K-1 to each of your shareholders. And next, you want to finalize your accounting and corporate taxes. So after you have given notice to your creditors, liquidated your assets, paid your debts, and filed for your certificate of termination, it's time to finalize all of your taxes and open accounts. So for employees and contractors, you will need to either finalize your payroll or send out W-2 and 1099 forms, respectively. You will also need to have your accounting department complete your corporate taxes up to the date of the dissolution and actually determine any amounts owed to the IRS. And the thing is, you need to now pay out any final expenses. So after dissolution is complete, you will likely have a few final expenses, such as accounting charges and legal fees to clear up. Otherwise, the process is considered complete. The IRS will provide you with 30 days to file your final corporate tax return using Form 1120S. Converting an S corporation to an LLC can enable your business to access greater flexibility in how the business is structured, how it's taxed, and how profits is distributed to members. So when you decide to make the change and the time comes to form a new LLC, it's one of those things where make sure that you have the proper help. Okay, it can be an EA, a CPA, or a tax attorney. Let me give you a few extras here, so we can wrap up today's conversation. When we talk about converting S corporation to LLC, there are 3 ways that you need to consider here. The thing here is that, first of all, why should you convert S corporation to LLC in the first place? Well, I think I was pretty clear here that you are doing it for a variety of benefits. Most importantly, you want to have the flexibility. Okay, LLC gives you flexibility. So the question is it really worth it? Is your current S corporation structured in a way that you have flexibility, or this just like very cumbersome? Because if your current S corporation is already flexible in terms of management, then it might not be needed for you to actually go through the whole sort of obstacles that are needed to actually convert. Okay, and so but the LLC is kind of cool also because you can customize the organization structure to best fit your business's needs. Maybe right now you want to actually reach out to foreign investors. You want to have let's say you have foreign financiers who are interested in your company. Then you might want to ditch the S corporation structure because of the requirement to have American or residents here who can only contribute. So by ditching that sort of S corporation, you will be able to draw let's say financing from foreigners among other people. And you're not also limited to the whole thing about 100, like having fewer than 100 members, if you will. But you also have to think about how the fact that you are you got to look at how the transition will affect your personal taxes. Because see, remember, when we talk about transitioning from S corporation to LLC corporation, you're not only so now instead of filing Form 1120S, you'll be required to file Form 1065 and Schedule K1, depending upon whether you are switching to a single membership or a multi-member LLC. Whether you're switching to a single member LLC or a multi-member LLC. If you're switching to a single member LLC, you got to file Form 1040 Schedule C. If you're switching to a multi-member LLC, we're speaking about Form 1065 Schedule K1. The question is, how is that affecting you ultimately? You who are listening to me right now, you are an LLC member. How is that affecting you? Are you actually paying more taxes or less taxes? Are you paying capital gains taxes, or are you paying fewer? Are you paying less capital gains tax? So those are things you need to really think about. Okay, so it's not something that should be considered lightly. You want to look at the whole chain of steps you need to take and the benefits that you'll be reaping once the conversion is done. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about transitioning from S corporation to LLC, the tax implications. So I gave you the synopsis, the bonus, the steps, the approach, and the extras. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.